And the eighth MCQ is, at the end of Laurie's financial year, it was decided that the balance on the telephone expenses account, $340, should be split 90% for business use and 10% for personal use, which journal entry record the closing of the telephone expenses account at the end of the financial year. And the number A option is correct. Drawings will be debited by $34 and income statement will be debited by 306 and telephone expenses will be credited by $340. When we will pay the telephone expenses, it will be debited, telephone expenses will be debited by 340 and to cash will be credited. If we will pay with check, then bank will be credited 340. And how we will bifurcate or separate both these accounts? If we want to separate these entries, we will do drawings to telephone expenses, 34 debit and 34 will be credit. Drawings will be debited by 34 and telephone expenses will be debited by 34, and remaining from 340 less 34 income statement, the expenses, telephone expenses will be closed in the income statement, because all expenses are closed in the income statement. Income statement will be debited by 306 and to telephone expenses. If we will merge both these entries, drawings and income statement, then A option will be made. So we can make these two entries instead of A option, and A option is compound entry. We can separate these two entries, drawings and income statement. The following account appeared in Amna's ledger: Sayyed account. The Sayyed account is customer. On 1st September, balance PD was 400 debit, because for Amna this is asset, and asset has debit balance. And on 14th September, sales to Sayyed 600, and now the balance is 1000, that is debit. And on 26th, Sayyed paid to Amna 390 and the remaining balance is 610 debit. And on 26th, the Sayyed received discount $10 and the remaining balance is 600, that is debit. Which statement is correct? A option is, on 1st of September Amna's owed Sayyed $400. It means कि Amna will pay to Sayyed. This is not correct, because Sayyed will pay to Amna. B option is, on 14th September Sayyed purchased goods $600 on credit from Amna. This is a correct option, because Sayyed has purchased goods on 14th September worth $600 on credit from Amna. And 10 number is, a purchase of furniture was debited to the office stationery account. What type of error was made? Commission, compensation, omission, and this is a principal error. Javed wishes to write off a debt owed by Carl, a credit customer. Which entries would Javed make? Javed wishes to write off. Javed ने write off किया है Carl को. Carl was the credit customer of Javed Which entries would Javed make? Javed will make entries bad debt to Carl account. It means A option will be correct. Zafar maintains a provision for doubtful debt 2% of trade receivables. On 1st January 2018, the provision was $200. This is uh, opening balance in 2018. On 31st December 2018, the trade receivables amounting to $12,000. Which general entry records the transfer to the income statement on 31st December 2018? And the first A option will be correct. Income statement to provision for doubtful debts $40, because when we will take 2% of 12,000, it will be $240, and we have already $200 opening balance of provision. So we will transfer to the income statement only $40, because we will increase the provision with $40, because we have already $200 for this provision, and 40 A option will be correct. And 13 number is sales return were incorrectly recorded as purchases done in an income statement. What was the effect of this error? And the D option is correct. Profit for the year was overstated. When we will recorded sales turn as purchases turn is the part of the cost of sales, and cost of sales is deducted from the sales, and when gross profit will be, and as a result the gross profit will be overstated. So D option will be correct. Sales less cost of sales. When cost of sales will be more, then the gross profit will be more. Profit for the year was overstated. And would the following be classified as a capital receipt or a revenue receipt? There are three lines that there are three proceeds. The proceeds received from the sales of the delivery van, this will be capital receipt. The profit made on the sales of the delivery van, this will be revenue receipts. The proceeds of sales of the owner's private car paid into the business bank account, this is also the capital receipts, because he is injecting more capital in the business. And B option is correct, because first is capital receipt and the second is profit from the sale of delivery van, revenue receipts, and the third one is also the capital receipt. And the 15 number is, after the preparation of the Abdul's draft financial statements, two errors were discovered. The purchase of a machine on credit $5,000 was omitted from the account. The purchase of a motor vehicle 15,000 was entered in the error in the motor vehicle repair account. What effect will correcting these errors have on the non-current assets and the working capital? And the C option will be correct, because increase non-current assets will increase by $20,000, because 5,000 of machine and 15,000 of motor vehicles. 15,000 plus 5,000 will be non-current assets, and non-current assets will increase by $20,000, and working capital will decrease by 5,000, because the $5,000 of machine, the $5,000 of machine was omitted from the books of accounts, so working capital will be decreased. Because this machine we have purchased on credit, and when we will record it, the current liabilities will increase and the working capital will decrease by $5,000.